Welcome back to the weekend edition of the Stats Edge Trading Market Wrap Up with myself, Michael Nauss, again from Stats Edge Trading. If you're new here, what we do is end of every week, take a step back, we go over some weekly charts, we figure, hey, this is what's happening in the market. What can we maybe glean from all this, and what can we maybe predict going into next week? I talk about some stocks that I'm watching. Soon those are going to be on my Substack, so make sure you sign up there. Go to statsadtrading.com, sign up for the Substack. I'm working on some cool algorithmic type stuff that you will be able to find only there in the near future. So without further ado, let's get into it, and let's take a start with here and Bitcoin as always. So we're starting with weekly charts, and then we'll zoom into lower time frames. So I talked a lot about Bitcoin in the monthly review and all the weekly reviews, and basically saying we're just watching this zone right here where we have these prior highs. We ran a long way to get there. Wouldn't surprise me if we get a little bit more nonsense back and forth to deal with those prior highs. That, again, seems perfectly normal to me. We had a little bit of a down week this week, dealing with this bottoming tail week. If you want to play this bottoming tail, I would say you pick your area to buy as it pulls back and maybe stop below that bottoming tail. Again, for me, it's just a little bit of a choppy mess. I may ping a little bit, but it wouldn't be a full position because I want to see a break one way or the other before I get too committed. And that is going to be a theme that you're going to see going through here as well. Take a look at Ethereum. Again, I've talked about it a million times. Relatively weak, couldn't get to all-time highs. If you look at this candle, also relatively weak. We're almost breaking this prior low. So Ethereum seems to be the dog. And then same with a lot of these altcoins, right? So we have ADA. This one's not doing nearly as well. We have Dogecoin not doing nearly as well. Nowhere near all-time highs here on Dogecoin. So Bitcoin remains king. If you're going to be bullish crypto stuff, to me it makes sense to kind of play with the king. Now, this anchored VWAP acted as resistance in through here. There was a while, it's probably gone now, where if we drew an anchored VWAP, where's my tool right here, from the lows, this was acting as support. If we went into, let's say, the 1 hour and line this up a little bit better like that. Yeah, we came in, this anchored VWAP acted as support. We bounced up, we hit, let's draw this a little better. Crypto's a little bit weird because it's, so finely traded 24/7 that you have to kind of go into like an hourly chart to draw these right, I think. And right, that acted as resistance as well. Big push down here. So for me, right, nothing to do here really. If anything, I got to be short. And if I'm going to be short, I'm going to be short Ethereum instead of Bitcoin because, again, that relative weakness. Now let's take a look at Euro USD as we get into the more traditional currencies, and then out to the weekly. This anchored VWAP that we've been talking about all the way since October 2023 continues to act as support right here. We came in, we hit that. Now we have kind of 3 weeks up in a row bouncing off this area. As always, this will look different from the DXY. That hit this resistance and is now pulling back a little bit. So looks like we're seeing a little bit of weakness in the dollar. That weakness could continue to these lows. If that weakness then breaks, then I don't know where we would see the dollar go in this area. You'd think that would be bullish for stocks, but that relationship to me seems a little bit broken. That's happened recently. Taking a look at gold. Gold, the anchored VWAP from the breakout point, acted as support. We had a massive rally this week. As I go through TI Strength, which is a relative strength scanner and trade ideas, a lot of gold in there. So a lot of things pointing to maybe this is the next little go in gold, potentially. So I want to take a look at that. Silver looked great this week, but I still need to point out the relative weakness in silver that we haven't gotten over this high. So what Ethereum is to Bitcoin, silver is to gold. Doesn't mean it can't catch up, doesn't mean it can't surpass it. But again, right now, some relative weakness there for sure. Going down the list, I also have to go over Swiss franc. Full disclosure, I am short Swiss franc from somewhere in this candle right here. And I'm also short a little bit of the yen, long the yen, short USD JPY. The idea is we have a big resistance in this zone. If we take a look at the COT data, or the commitment of traders, a lot of people are betting that this is going to go higher, and a lot of people are betting that the yen is going to go higher. I see these charts as at resistance, so I'm taking a shot to the other side of that. If I'm right, then great. But yeah, that's what I'm seeing as a little bit of an opposite there to those particular trades, looking to see if we can pull down a little bit off of these prior resistance zones. And then the yen, the thing I have with the yen, if we go into more of a shorter term chart, is you can see we had this crazy couple moves. This was the Bank of Japan intervening. The Bank of Japan has basically stood up and said, we are not allowing our currency to go any lower, which would mean this pair go any higher. And yet some people, they want to buy that. That's not something that I want to do. I don't want to buy versus a bank, because they could come out on the weekend and say, hey, we're changing some things. We're going to start buying back our currency. And then all of a sudden the market opens up way down here, right? So I am short a little bit just because I see this big push up and starting to wean out in this area. So I have a short kind of in this zone right here. Worst case scenario, I'm wrong if we get out of here, looking to see if this breaks and comes back into this area on the yen. Now, let's get into this first. So I've talked about what I'm building out for the Substack. And what I'm building out for the Substack is a lot of algorithms that I'm using to find stocks. I'm sharing those stocks right now, but again, they will be on the Substack starting soon. One of the things that will be included on the Substack as well is this area down here. Let's make that a little bit easier to see. This zone, this zone right here. And what I'm doing here is I'm combining a whole bunch of things that I am interested in when it comes to strength and weakness on the overall market, and I'm color coding that on the bottom of the screen. Again, this chart will be posted in that Substack every day, where it shows green when everything under the hood I'm looking at is bullish, and then yellow when it's kind of a cautious mode, and then it may actually turn red when I think we are very oversold and potentially a bounce area. This is not discretionary. This is all mathematically derived, again, based on some correlations with things like utilities, which we'll talk about, breadth indications, anchored VWAP indications. It's a big conglomeration of looking at different indicators to try to get a gauge of what's happening in the market. Now, speaking of, let's get in here. Let's go to the weekly chart, and we're going to go to SPY. We're going to zoom out. All right, what do we say? We're knocking on the door of all-time highs. Again, I wanted to bring this in, show that this is still yellow, showing that there is some signs that under the hood things could get a little bit bearish, but I am always going to look at price over everything. This is kind of a guide for me to say, am I really, really aggressive? Am I a little bit passive? That type of thing. So, could this signal kind of show us that maybe we're going to hit this resistance area and chop around for a bit? Maybe. I think we have some big economic numbers come out, but if we blow through that area and keep going, right, no risk on, risk off indicator in the world is going to have me worried about this market, because if we're just rocketing into all-time highs, I can't be bearish. Definitely not going to be any reason that I would short this market. Again, just how much risk am I willing to put on when these areas are holding green and the market's breaking and trending into new highs? This is where I want to get really, really aggressive. When they're yellow in this area, I want to start watching. A little bit closer and maybe trading a little bit more of bounces and things like that. So that looks good. We go into the RSP, which is the equal weighted SPY. So basically take the SPY and then remove the Magnificent Seven, I think they're calling them now, as a major, major weight. This is every market or every stock in the S&P 500 equally weighted or equal importance. Still looks great, right? A little bit weak relative to the overall market, showing that the Magnificent Seven, or I think is what they're calling them now, is, again, a little bit of the overall market. However, everything's still looking strong here. So quickly, a couple industries. URA continues to bop up against this high. A little bit of a topping tail here, but I definitely want to watch URA. Uranium really, really strong. If I go to USO, Right. Nice little pullback here on USO, but a relative weakness to the market. However, XLE, which is energy minus USO, it's a very interesting looking chart with prior highs acting as these are resistance points, now acting as support in XLE. So again, something I'm watching right here. Going to semiconductors, the leader continues to lead. We're getting close to an all-time weekly closing high. Didn't quite hit that. ARKK, Kathy Wood continues to be a stinker as this closed near low. And then BRK, Berk B, continues to be the king, right? So we have Berkshire Hathaway continuing to kill it. We have Kathy Wood's ARK continuing to stink. So it's just showing that value is still leading. Going to XLU, XLU is the utilities ETF. This is something I want to take a second and talk about. The utilities ETF worries me a little bit when this thing is doing very, very well. The reason for that is that this is generally considered defensive sectors. Now, I would go back to the video that I did on Wednesday where I talked about more of this in detail, but when defensive sectors are rallying, that can be a precursor to maybe the market is getting a little bit toppy. So this is the chart that is most concerning to me. So let's go through a couple of these algorithmically derived stocks here, just so we can look at what we're talking about. So first is SCSC, which is a computer equipment software. This is from the weekly breakout scan. You can see a pretty good breakout here on pretty decent volume. The algorithm suggests a buy on a Monday and then a hold with a stop under this low and a hold for a month or so. Again, I'm using these as guides, knowing that there is a statistical advantage to them. If I take a look, I can show you guys this right here. This is the back tests of one of these. You can see all of the different Monte Carlo simulations showing that over the last number of years, again, nice looking equity curves showing, outperformance to the S&P 500, just owning these particular names. So that's why I'm looking at these. I'm not going to go through all of them, but I will post all of them on my Substack. So make sure you're going to statsedgetrading.com, signing up for that, which right now is for free for a little bit longer. LII, air conditioning and heat manufacturing. Little breakout, not a huge breakout, but a little breakout here on the weekly chart after this prior resistance acted as support right there. ARES, this is a really good looking one. Management Corporation. Nice breakout here on ARES after putting in a big base here. Nice solid breakout on pretty decent volume. I like the look of this one. And let's do ZIM. So the shipping guys have been doing great. ZIM is breaking this prior high right here. I think that's what the algorithm is looking for. This one has a 23% short float. That's pretty significant. Now, these ones are anchored VWAP pullback, so a little bit different. So let's go GIII. So these are for in times in which I'm looking to buy pullbacks as opposed to breakouts. And we have a nice pullback in this GIII holding support right here. We have GORO. Let's go back to right here, this swing low. And you can see how this GORO, this is a little bit the gold and silver miner, right? So this is a little bit speculative, but that gold and silver mining space looks interesting as a 40-cent stock, holding this anchored VWAP from the low right here. Thing I like about these trades is the risk and reward is super simple. If we get through this area right here, kind of 51 cents, that's where I'll look to get involved. We're wrong if we break these lows. Again, easy peasy when it comes to trying to figure out the trade. Old Hood, Robin Hood. I think it's from, draw that out. Is it from way down here? Maybe it's from way down here. I can't remember. No, it must be from this major swing low. Yeah, we're coming right back into that after earnings, hitting that level right there. I think this is corresponding with crypto. This moves a lot with crypto, but again, we're looking to see if there's some bullish action in this area. And then SMG, last but not least, Scott's Miracle-Gro of all things. Didn't even know that this was a stock. Nice anchored VWAP support in this area for SMG. I like it if this could push off. We got 11% short float here. Again, I love the fact that I know where I'm wrong. A close below this level, time to go. So that is it for today, everyone. So thank you guys for tuning in. Again, make sure you go to statsedgetrading.com, sign up for all the cool stuff there, the free email list, so I can get a hold of you guys when I'm ready to launch what it is that I'm slowly working on behind the scenes here. Thank you guys for tuning in. Like, comment, share, all of that, and get away from the screens.